All right. So long-term lenders actually also come in three categories for us. So as we look at DSCR lenders or rental loan lenders, the first bucket that we see is what we call non-QM or DSCR non-QM lenders. So these are typically lenders who are coming from doing consumer mortgages. So they're doing Fannie, Freddie mortgages. They're maybe doing VA, USDA, all of that stuff, and they are deploying resources from those underwriting groups into into their DSCR process. So we have not had really good luck on our platform with non-QM lenders because of the items that you see bulleted here. Typically, versus a private lender, they have a much more lengthy conditions list, much more things that you got to clear in the underwriting process, heavier verifications. The pricing is about the same. So between non-QM and the private lender, as far as what we see, and I think the big difference is that those particular loans may wind up in with a different investor or a different exit strategy for that lender, meaning they may securitize them directly or may sell them to a different group of institutional buyers. So the second group are the ones that we spend most of our time with, which are the DSCR private lenders. These are lenders that typically have done fix and flip loans in the past and are used to a much more streamlined set of conditions and have negotiated those conditions with their institutional buyers. So typically those lenders are structured in a couple of different ways. Some set up wholesale organizations where they work with folks like LoanBidz.com, and they work with other brokers and that sort of thing, or correspondents, and actually work to do some lighter processing and let relationships like LoanBidz do the bulk of the processing work. And other ones have a retail process, meaning that you would be working directly with an account executive at that particular lender, and they would give you a retail sort of experience, meaning they would be doing all of the processing, the ordering of appraisal, title, and the whole thing. So again, you find those in the non-QM world as well. But again, there are many wholesale lenders that don't actually have a retail operation or have a small one. So we get the benefit on our exchange of having super good pricing, because that's the way that they have structured their business very lean to do more. Again, their pricing is pretty much at parity with the non-QM lenders, and many of those loan buyers are either insurance companies or institutional buyers. So the third bucket of lenders, I would kind of group as some of those are the same as the private lenders, but have certain niches that they can play in. And some of them are completely different lenders that really specialize in that particular niche. And some of those features are some lenders can do properties that don't cash flow positive. So less than 1.0 DSCR, there are options out there. Yes, they're going to be more expensive than a traditional loan, but we can still get 30-year fixed mortgages on less than 1.0 DSCR. So again, if you've got a property, I don't know why you'd want to do it long term, coming out of pocket every month in addition to the monthly payment. But let's say you want something that you're going to dispose of soon, or maybe the rents that you're collecting are different from what the true market rents are, and it just shows up from an underwriting standpoint as less than 1.0. You can do the next feature is you can do higher LTVs at lower FICO scores. We have some lenders that can stick at 75 or 80% LTV all the way down into the mid 600 range on FICO scores. That particular set of lenders gets a lot of traction for those folks with sub 700 credit scores. Some lenders can do short-term rentals. and underwrite them different ways. The ones that we like the best are the ones that use folks like AirDNA and the information that AirDNA provides in order to determine the overall cash flow expectation for that property. Obviously, a couple of years experience, with an established property is preferred by everyone. But many times, if you're buying that property for the first time and it's never been in a short-term rental, it's impossible for you to really demonstrate that history. The niche lenders, as I mentioned, typically have a little bit higher rate and fee options. Again, it's not hateful in most cases. It's maybe 1% higher, maybe it's a point higher. So it's doable, and we do a lot of loans on these types of programs. In addition to that, depending on the lender, some of them securitize directly, and other ones have institutional buyers that buy these type of niche loans as well.